You think you found the perfect property? Well, watch out for these red flags that can really cost you big. Hey, it's Bud Evans. I love finding winners, but I've also learned that the fastest way to make money in rentals is to avoid the losers. Today, I'm handing you my field guide to red flags, what they look like, why they matter, and how to verify them before you wire a single dollar to title. None of this is legal or tax advice. It's just an operator's checklist that I've used that can run in any market. First, before we begin, do me a favor, hit that like and subscribe button, and don't forget the notification bell so you don't miss out on the next rental property investing breakdown. First, and one of my big 6 items, is the foundation and water. The silent profit killers. If a house has chronic water problems, it's trying to tell you run away now. Look for stair-step cracks in block walls, horizontal cracks in poured concrete, doors that rub, floors that bowl or crown, and patched epoxy lines without drainage improvements. In basements or crawl spaces, use your nose. If it smells funny, usually means moisture. Efflorescence, white chalky residue on masonry, says water's been there before, be wary. A cheap fix, painted on, waterproofing, it never solves that hydrostatic pressure. So verify. Bring a strong flashlight and a moisture meter and check your grading. Soil should fall away from the structure, 6 inches over the first 10 feet. Look for functioning gutters with full-length downspouts, pushing water about 6 to 10 feet away from the house. Ask for any structural reports if you notice anything. If there aren't any, hire somebody to do it. And here's the decision rule. If the foundation repair plus the drainage plus the interior finishes, wipe out your cash cushion or push your DSCR below your floor. In my case, it's 1.3. Renegotiate hard or walk away. All right, talking about foundation. If you're not sure where to start on your journey in real estate investing, or if you're experiencing that analysis paralysis, go to budevans.com and book a free 30-minute strategy session, and I promise I can help you get started. It is not a sales pitch. I'm not selling some kind of $20,000 guru coaching program. I just love to watch others succeed. All right, let's get back to the list. Number 2 is roof, siding, and exterior openings. This is where money evaporates. Curled shingles, heavy granule loss in gutters, soft sheathing at eaves, or patched layers all mean budget a roof. On flat roofs, ponding water, cracked seams, they're your tells. Look for rot at the bottom courses, failed caulk, missing kick flashing, and soft trim. Windows that won't open or have failed seals, that's fogging between the panels, can be a 5-figure surprise. So verify this by using binoculars on a roof or a drone, a camera, check your permit histories for re-roofs, and feel the soffits for softness. Spray a hose at suspect windows and door thresholds to see if they're going to weep inside. And if the exterior shell is failing, you're buying a renovation, not a rental. Make sure that your price is going to reflect that. Let's get into the MEPs. We're going to get part of it. Electrical and plumbing. Safety first here, then 11-tube wiring, aluminum branch circuits, double tap breakers, missing GFCIs near wet spots, and underground outlets are all insurance nightmares. Plumbing red flags include old galvanized supply lines, that's brown water, low pressure, cast iron stacks with scaling and cracks. Believe me, I found one behind a wall that was completely gone. And mystery repairs using flex hose or duct tape or shark bites, wet ceilings under bathrooms, black stains around shower bases, and toilet flanges set below the finished floor are going to equal reoccurring leaks. So carry a 3-light outlet tester and check random outlets. Pop the panel, cover with a licensed pro when allowed, run every faucet and flush every toilet at once, and then see if the pressure is going to back up on you or not. If there's a basement clean out, pull the cap and sniff. Rotten egg means a failing trap or a venting problem. Here's where you make your decision. Mandatory life safety fixes go into your day 0 CapEx. If the seller won't price for your risk, you shouldn't fund their deferred maintenance. Run away. Here's the other part of the map, HVAC and mechanical. There are going to be hidden operating costs here. Short cycling furnaces, cracked heat exchangers, mismatched condensers and air handlers, no kidding. Ancient boilers, I've had them 80 years old. If they haven't had recent service tags and space heaters are used as your primary heat, these are all red flags. In colder markets, undersized systems or poorly insulated attics mushroom your winter bills. And in human market, oversized AC causes moisture and mold. So photograph your labels, your model, your serial number, then check the age. Look for recent service stickers, use an IR thermometer at vents. Big temperature splits are good. Weak or uneven air suggests ducts or equipment issues. So to make the decision, replace before fail can serve, right? So emergency pricing and tenant churn, budget accordingly. Environmental and health are deal breakers that you cannot see. Lead-based paint in pre-1978 housing, friable asbestos with old pipe wrap or floor tiles, and mold behind finish walls can all carry compliance and remediation costs. Underground oil tanks, I've had this happen, if they're abandoned or unknown, can become a six-figure liability, no kidding, if they're burst especially. Past fire damage hidden by new drywall shows up as char and framing or soot staining in attic cavities. In pre-1978 homes, assume that lead exists and confirm local certification requirements. Ask directly about oil heat history and scan with a tank sweep company. Look for moisture patterns on drywall with a meter and check attic sheathing for smoke shadows. And here's your decision rule. If the remediation risk is unclear and the seller cannot document resolution, price it as if the worst case scenario is real or walk away. Number 6 here is title, zoning, and unpermitted work. These are legal landmines. A finished basement with an in-law suite or a converted attic often means unpermitted work. In multifamily, illegal extra units get flagged during inspections and you inherit the compliance fight. Easements cutting through driveways, encroachments, shared wells or septic, and missing final permits all are going to create future butt pain for you. And in some towns, rental licenses require specific safety upgrades and occupancy limits. If you ignore them, you are going to face serious fines or forced vacancies. How do you verify that? Pull a municipal file search. Compare the seller's unit count to tax records. Ask for COs and a certificate of occupancy and prior rental licenses and final permits for additions. Confirm lot lines and easements with a survey when boundaries are tight. Here's your decision rule. If income depends on an illegal configuration, you don't have a durable NOI, so correct it on paper or walk away. All right, let's talk about looking at your location and your surroundings, because the context that you can't renovate is a great house, bad street equals bad house. Red flags include chronic trash dumping, boarded up neighbors, heavy daily police activity, weak street lighting, and a third shift crowd that changes the character after dark. Next, look for economic anchors. Is there a major employer exodus, school consolidations, or infrastructure projects in the area that cuts off all your access? Are you in a flood zone, wetlands, or frequent sewer backups can really make insurance pricey or near impossible? Verify this. Visit 3 times, weekday morning, evening rush, and late night. Talk to neighbors and delivery drivers, check flood maps and recent claim trends with your insurance broker. Look at the FEMA website. And here's your decision rule. If you wouldn't let a family member live there at night, don't buy it. Don't rent it to somebody else. You're just creating a headache for yourself. Let's talk about taxes, insurance, and hidden fixed costs. This is number 8. They're going to show your tiny tax bills often ignore reassessment after sale. Insurance that looks cheap is going to jump when the carrier sees age, wiring type, distance to hydrants, and claim history. HOA and condo associations can impose special assessments or have underfunded reserves. Municipalities with annual rental inspections bring reoccurring compliance costs. Now, here's how you verify. You can ask the assessor how they treat sales for reassessment. You can get a real quote from your broker based on actual details, not guesses. Get a copy of the HOA guidelines, budgets, and minutes. Identify all reoccurring licenses and inspection fees and put them in your underwriting. And here's your decision rule. Underwrite to your taxes and insurance, not the sellers. Remember, your taxes can go up when you rehab a property. Let's talk about financial fiction here. This is number 9. Financial fiction is numbers that don't survive daylight. And sellers love round numbers. Rents are $1,500 each, but the leases are going to show that they're $1,200 with concessions. The tenant pays it all, but water and trash are billed to the owner. Expenses are 20%, with no maintenance log, no reserves, and no management fees. Vacancy magically set at 0, and always no trailing 12. This is my favorite, because if they're not showing you their operating expenses or their bank statements, their claims aren't supported. So here's how you verify it. You demand leases, you demand rent rolls, deposits, payment ledgers, utility bills, the past 12 to 24 months of income and expenses, and bank statements. Rebuild a T12 for yourself, trailing 12. Normalize with vacancy, real maintenance, reserves, and a management fee, even if you self-manage. And here's your decision rule. If the story and the statements don't match, price it off the paper, not the pitch, or, again, walk away. Number 10 is tenants and operations. You want to inherit the truth, not the brochure. Month-to-month tenants with chronic late fees, residents who pay cash only, or occupants who refuse access for legally allowed inspections are big red flags. So are family friends with handshake deals, missing lead or rental certificates when they're required, and an outstanding code violation that the seller expects you to handle later. Don't do that. In rent-controlled areas, promised market rent next month can be a fantasy if laws cap increases. So you verify it by interviewing the property manager, not just the seller, knock on doors with permission, confirm security deposits and where they're held. Check court records for active evictions or recent filings. Understand local rent rules, caps, notice timelines, fees, and renewal requirements. Here's how you make a decision. Buy what exists today, not what could be if everyone magically cooperates. Number 11 is utilities and building systems that are going to bleed cash. A master metered electric or heat in a multifamily will destroy your margins, especially with electric baseboards or oil heat. Shared water without individual shutoffs breeds disputes and leaks that you cannot isolate. Septic systems with unknown pump dates and no records, clay sewer laterals in older neighborhoods, or repeated slow drainage. If you have those service calls, they are lead indicators of a big underground bill. Here's how you verify it. Confirm separate meters. If master metered, price sub-metering or rubs were allowed. For sewer, get a camera scope. It's cheap compared to digging up a street. Pump and inspect septic. Don't accept that it's fine without paperwork. Here's your decision rule. If you can't meter or fairly allocate, you're eating it. So either factor it into your price or skip the deal entirely. Number 12 is your management and your vendor flags. A property manager who resists your questions, can't produce SOPs, standard operating procedures for delinquency or maintenance, or won't share their vendor invoices is waving a red flag at you. Vendors who can come next week on emergencies or who never sent photo proof on completion become your reputation problem. Hey, great deal, but it needs a little TLC often means we ignored a lot of maintenance for years and it's on you now. Here's how you verify it. You ask property managers for the delinquency flow, their maintenance SLAs, and their reporting cadence. Require vendors to include before and after photos on every ticket and track first-time fix rates. And here's your decision rule. If ops are opaque, they're broken. Don't buy the mystery, buy the math. Number 13, negotiation clues are going to save you from yourself. Red flags are going to show up in how sellers behave. Refusal to allow an inspection, aggressive deadlines with no data room, or as is, where is, paired with rosy financials and zero documentation. Price alone is not a reason to suspend judgment. Desperation is not a strategy. Here's how you verify it. Time box due diligence with a clear document checklist. If materials don't arrive, you pause or you walk. Counter with 3 options: a lower price for as-is risk, same price with seller credits and repairs, or seller financing with protective terms to offset your unknowns. Your decision rule is this. Pressure is a tactic. Clarity is your defense. Walking into a house with leases written on napkins is not sufficient. Let's talk about number 14, a simple walkthrough. This is what I do every time. Drive by for 5 minutes, looking at roofs, grading, neighborhood pride of ownership, nighttime lighting, and parking realities. Curb to crawl is another 30 to 45 minutes. You're going to look at your exterior shell, foundation lines, gutter, downspout functions, moisture in the basement, crawl panel peak, run every faucet and flush it. Heat, air test, attic check, window and door function, smokes and CO alarms. Paper pull, it's same day. Leases, rent rolls, ledgers, T12s, utility bills, licenses, permits, violations, insurance, claim history, HOA docs if they have them. Here's a triad. Seller, PM, and contractor. Ask each the same questions and note where the answers diverge. That's where the truth lives. What to do when you find a red flag? Number 1, quantify it. Get bids, not vibes. Number 2 is underwrite with real numbers, taxes, insurance, CapEx, and vacancy. Number 3 is reframe your entire offer, price, terms, or both. Number 4, decide fast, buy, restructure, or walk. No maybes in this, it's math. Remember, passing on a bad deal is a profit. Your future self will thank you for the deals you didn't do. If this checklist helped, put it to work on your next walkthrough. Print it, run it, and compare your notes to the seller's story. Again, if you think that this might help you at all, like, subscribe, share this, and hit that notification bell so you can be sure not to miss the next breakdown. And here's a quote. When your discipline is sharper than the property's problems, you will buy fewer headaches and keep more of your cash flow. It's exactly how this business is supposed to work. All right, I'm Bud Evans. Aim high, execute fast, and I'll see you on the next one.